All right, let's get right into it. It's Thursday, February 12th, 2026, and this might just be the most important day for your portfolio this year. The question on everyone's mind is simple. Is this a historic recovery for Bitcoin, or are we watching the start of a catastrophic collapse? Let's dive in.
Yeah, your portfolio is bleeding, isn't it? Bitcoin is down a brutal 47% from its all-time high of over $126,000. If you bought higher, you are absolutely feeling the pain right now. Trust me, you are not alone. And this is why. The Crypto Fear and Greed Index is at a 9. I mean, just let that sink in. 9. That is extreme fear. We're talking about a level of panic we haven't seen since the absolute rock bottoms of previous bear markets. Seriously, what you decide to do today could define your entire year. So the big question is, what happens next, right? Is today's price of $67,000 the buying opportunity of a lifetime before a massive run to 100K? Or is it a bull trap just before a devastating crash down to 40,000? In the next 4 minutes, we are going to break down the data you need to decide.
Okay, so let's just get our bearings. Today, February 12th, 2026, Bitcoin is fighting for its life at this pivotal $67,000 level. And this comes right after that terrifying plunge and, let's be honest, a pretty weak bounce from 60,000 last week. The entire market is on red alert.
So how in the world did we get here? Well, just 4 months ago, back in October 2025, we were sitting pretty at an all-time high of $126,080. Then, last week, we hit that gut-wrenching low of 60,000. And that brings us to today, February 12th, where Bitcoin is in an absolute dogfight at 67,000.
Look, this wasn't just one thing. It was a perfect storm. We saw record ETF outflows, that's the big money getting scared. A massive $4.57 billion walked out the door in November and December alone. Then you had the nomination of Kevin Warsh for the Fed. He's a known hawk, and that immediately spooked the markets. Of course, that triggered a cascade, over $1.39 billion in liquidations, just wiping out countless traders. All while institutional selling on Coinbase hit yearly lows. Just out.
But here's where it gets really interesting. The research firm Kaiko is actually arguing this isn't a surprise at all. They're saying, hey, this staggering 52% drop, it's a normal, even expected part of Bitcoin's historical 4-year cycle. And that cycle, well, that's the cornerstone of the whole argument that the bottom might be in.
All right, let's get into the bull case. This is the path back to recovery. This is the argument for why today, February 12th, could be the absolute bottom for Bitcoin before we see a run back towards $100,000. So why might the worst be over for your portfolio? Well, first and most importantly, that critical support zone between $60,000 and $65,000. It held firm. That's huge. We're also historically oversold on key metrics. And get this, while most institutions were panic selling, BlackRock's ETF was quietly seeing inflows. That's a classic sign of smart money buying when there's blood in the streets. You know, this extreme fear we're seeing today, it's often a powerful capitulation signal that marks a market bottom. And check this out. This is a crucial number you need to know. $84,099. What is that? That's the average cost basis for all the Bitcoin ETFs. You heard that right. The big institutions bought in higher than where we are today. They are underwater. They have a massive incentive to defend these levels and push the price right back up. And even with all the panic in the market today, just look at this. The major analysts are still calling for a massive recovery by the end of the year. You've got Fundstrat's Tom Lee targeting up to 250K, and even big banks like Standard Chartered are looking at 150,000. The message here is they believe the fear we're seeing today is just a temporary setback. Okay, we have to be fair. Let's look at the other side of the trade, the bear case. This is the argument that today's bounce is nothing but a trap, and a collapse to $40,000 is still on the table for Bitcoin.
So why could this get a whole lot worse? Well, that price zone from 70,000 to 72,500, it's now a massive wall of resistance. And crucially, major ETFs are still seeing huge outflows. We're talking Fidelity, Grayscale, ARK, they're selling. The retail investor, on-chain data shows they're pretty much gone. And with market liquidity so thin, any real selling pressure could cause a violent, fast drop.
And if you want to know what the extreme downside risk looks like, here it is. Mike McGlone, a senior strategist at Bloomberg, is warning that the current macro conditions are showing stress similar to the 2008 financial crisis, and he thinks Bitcoin could ultimately revisit levels near $10,000.
$10,000. Yeah, 10,000.
The bears have some pretty sobering targets. Stephen McClurg, who is bullish long-term, still thinks a summer correction down to 50,000 is necessary. You have K33 research pointing to the 200-week moving average around 58,000. Now, that is a key long-term trend indicator, and if we break below that, it would be a very, very bearish signal. A drop to these levels is a real possibility, folks.
So, here's the crucial point, right? We've got powerful arguments from both the bulls and the bears. So, what's the most realistic path forward for Bitcoin, starting right now, today, on February 12th?
The most likely outcome, honestly, isn't a straight shot up or a straight shot down. The reality is we're probably entering a period of just brutal, extreme volatility in a range between $60,000 and $75,000. The decisions you make at $67,000 today, they're going to be tested relentlessly.
These are the new battle lines you absolutely must watch today. The critical floor is 65,000. The last stand for the bulls is 60,000. If we break below that, 50,000 is very likely next. Now, to the upside, the first test is 70,000, but the major wall, that's at 72,500. If we can break that, it could trigger a nice relief rally. Okay, this is not financial advice, let me be clear, but what follows is your actionable survival map, a simple checklist for navigating the Bitcoin market over the next 48 hours, starting right now.
Okay, here are the 5 things you need to watch. Number 1, price action. Does that support between 65K and 67K hold? Number 2, what do the ETF flows look like tomorrow? Continued selling is bearish, period. Number 3, the fear index. Does it rise above 15, which would signal a bottom, or does it stay stuck down here at 9? 4, watch the volume. A big spike on a bounce is what you want to see. A spike on a breakdown is really bad news. And number 5, the big one. Can Bitcoin reclaim $70,000? You have to trade the chart and the data, not your emotions. All right, so we've looked at the crash, the bull case, the bear case, and the key levels for today. With all this data on the table, the final decision, well, it rests with you and your portfolio.
Bitcoin is at $67,000 today, February 12th. You've heard all the arguments. So what are you doing? Are you a buyer? A seller? Are you just holding on for dear life? What is your next move? Let me know what your plan is down in the comments below. Look, this situation is changing by the hour, so make sure you subscribe for daily Bitcoin updates for the rest of February. In our next explainer, we're going to cover the specific trigger that could cause a breakdown below $60,000. Stay safe out there, everyone.